So, what is today's video about?
Uh, Taxes?
Everybody's favorite.
Yeah, this past year we owed a ton in taxes.
It's unbelievable.
So we are going to talk about why that happened and what are some things that we're going to do to avoid it, and then what you can do to make the most out of your taxes so you don't owe as much as we did. Hey guys, it's Justine with Debt Free Millennials, the channel to help you crush your debt and live payment free. This is my husband Kyle.
Hey.
And you guys know we talk about our income and expenses on a month-to-month basis, but today we're sitting down with a cup of joe.
Yep.
And we are talking about taxes this time. So in 2020, when we filed our tax return, we found out that we owed a lot in taxes.
Drum roll. How much was it?
$9,987. Now that's combined federal and California state taxes. This was a lot. More
Unexpected. That was if you're expecting a large tax bill, which I was like, yeah, we'll probably owe like $1,000, $2,000.
We knew we were going to owe.
Yeah, that's the way we like to set up our tax plan. I don't like giving the government a free loan, an interest-free loan, and then you get a rebate. Ideally, that number would be less than 100. The delta either way, you either owe them less than 100 or they owe you less than 100 if you've done it right.
So we knew that we were going to owe money because my business with Debt Free Millennials had really done very well in 2020.
Yeah.
And my quarterly tax payments were not reflective of that new income amount. So I knew I was going to owe some self-employment tax there. What was a surprise is that we found out that Kyle's W-2 was not withholding enough in taxes.
Which is really odd, but it's just the way that it worked out. So that was where the surprise came from. Another area was that I had some short-term capital gains taxes that I did really well during the pandemic on. I had stock in Chewy and Zoom, and I sold those close to the top, and it was a good return. I'm glad I sold them. I'm glad I sold them when I did, because if I had held them for long to avoid the short-term capital gains tax, I'd actually have less money even though I'm paying more tax. So it's a good guessing game. I got lucky to sell those when I did.
Okay, so those were the three big reasons. Not enough held from the W-2, my quarterly tax payments weren't enough, and you had short-term capital gains tax on the stock that you sold. And short-term capital gains tax is calculated by your ordinary income. So it takes your ordinary income into consideration, uses that as the percentage for how much you're taxed. And there you go, almost $10,000.
At the end of the day, 2 out of the 3 are really a champagne problem. My wife's business did so good we had to pay more taxes. Oh darn. I did so good in the stock market I had to pay more short-term capital gains. Oh darn. That's a nice problem to have. The W-2 not being accurate was probably the most frustrating for me, because it shouldn't be that way. My employer should have the know-all to adjust those rates, adjust those withholdings so that it's a lot more accurate than it was.
And that's also a good problem. Well, I mean, that problem, yes, was bad, but it was also because you got a raise within the past year. And so you got a raise from work, and somehow the taxes were not adjusted. So what we're doing for this next year, for 2021, is that I will be taking 35% of my real monthly revenue instead of trying to do an estimated cost based off of last year's revenue, which clearly didn't work for me in 2020 because my income was so different between 2019 and 2020. So now for this year, I'm taking 35% of what I actually bring in every single month, setting that aside in a separate savings account, and then paying my quarterly taxes out of that. That way I'm not tempted to use that money for anything else. It's only for taxes. The next thing that we're going to do, I hope you already did this.
Oh, I did this like the day I found out our tax bill.
Okay. He adjusted his withholdings, and you requested an additional $160.
Yeah, it was $160. So there's a tab in our HR program that says withhold extra amount, and I just filled in the blank and hit submit. I didn't change any of the number of withholdings or anything like that. I just did a flat rate, just because then it's more predictable for me, because sometimes when you change the number of withholdings on those, it doesn't really come with a set amount, or at least it doesn't in our HR program. So it's hard to predict. Where if I just fill in the blank, I know that my paycheck is going to be exactly $160 less, and that's a lot more manageable when we're trying to go over the budget.
Yes. All right, so $160 per paycheck is what is being withheld, additional for taxes. All right, so some tax tips to help you avoid owing too much. Let's talk about that. One, there is a withholding estimator. It's a little calculator and quiz, I guess you can call it, on irs.gov that you can fill out. I've actually done a whole video about this estimator that I will link to up here for you to check out and use that estimator to figure out exactly how much you need to be withholding for your taxes. We kind of did that. It was more or less accurate based off of your withholdings, but we now know what to do. Next thing you should know is that if you make less than $75,000, you can file your taxes for free with the IRS. That means you don't have to pay a CPA, you don't have to pay for expensive online tax software. If you make $75,000 or less, you can file your taxes for free. In fact, there are some online tax software that you can utilize with that to file for free. Places like Credit Karma, you can file your taxes 100% for free.
You mentioned something in there about a CPA, certified public accountant. It doesn't matter what amount you make. If all that you ever get from your employer is a simple W-2, maybe you and your spouse or whoever you're filing with, you both get just W-2s, and that's it. You should absolutely not use a CPA. Take the 2 hours that it's going to take you to file your taxes and save the money, because of a simple W-2 and a couple of 1099s, you upload that information and it is quick and easy and fast.
So if you're going to use a tax software, I really like H&R Block. You will pay a primo price for that software, but I've done extensive reviews on online tax software, and that one, the interface and user experience is really well done. I also like TaxSlayer. TaxSlayer is less expensive than H&R Block, but it still has an easy-to-use interface, and if you have multiple tax documents, such as a 1099 div form, if you're earning interest, you'll get those forms. If you have a student loan interest deduction form, all these kind of various forms that you have when you go to file your taxes, those tax softwares are actually really beneficial to help you walk through those steps. Otherwise, you're going to look for a CPA. And a lot of people ask me, how did you find your CPA?
Ours was a friend. She does it on the side because she's already the accountant for a small business where I'm friends with the owner. So I already knew her. I didn't do a Google search. If you have a CPA that you use, how did you find yours? How did you vet them? How did you know if they were good or bad? Let us know in the comments.
Yeah, I was as simple as looking up somebody on Angie's List, or what did you do? We would love to hear your tips. We wanted to make this video, even though it's not tax season right now, that it's important that you think about these things for the next year. And remember, when you receive a refund from your taxes, you actually paid too much taxes in the previous year. So you were giving away too much money to the government, and you were giving that money interest free. So you didn't get any interest on that. So think about that. If you had a $2,400 tax refund, you could have actually had that $2,400 the entire time if you just paid less in taxes. Kind of weird to think about.
Yeah, that's $2,400. That's It's a lot. You put that monthly invested into a Vanguard account, index fund, could be making more money that way. And it was money you didn't think you had to begin with because the government was holding it in their pocket.
Yep.
Something to think about.
Thanks so much for tuning in on this tax sesh. We're going to go fill another cup of coffee. We'll catch you in the next one.
See ya.